while David was talking about the pound Swiss, just tracking on cable very quickly on the Ninja version. We can see here, this is the 10-minute. My combination of time frames tends to be a 3-minute, 10-minute, and then I have the hour for some context, and then I look at the daily as well, just to give me an idea of what the what the candle configuration, whether the pair is in a consolidation, is it in some kind of trend on the slower time frames. But the 10-minute chart, I don't know, it just for me it works really well. I know if you've got MT4, you won't have the 10-minute chart, you do on MT5, so possibly something like the possibly the 15, if that's a little bit too slow, go down to the 5-minute. But we can see here we've obviously the pound has been selling, but notice here at this little bit of price action here from around 7:30, just coming up to the London Open. The pound pairs, certainly some of them were moving very nicely coming up to the London Open, but cable wasn't. It was kind of moving sideways. There was obviously a lot of selling going off in the pound, but not cable wasn't possibly the pair to be in. But once the London session came along, we've had this really nice divergence where the dollar has been we've had buying in the dollar and a continuation of the selling in cable. And that often happens when you have strong buying of one, or selling of one particular currency. It's not necessary. That buying and selling rotates through the different pairs, and they sometimes rotate through the pairs based on the local time zone, the local the session in question. So that's something to be aware of. Or simply the flows, so you might see strong selling of the pound, as we have seen, against the Swiss, and then that flow will then rotate, even though the actual currency may be oversold or overbought. It's a kind of catch up in the other pair, so you could see the switch into selling, but it's being driven by, and certainly on cable, with the buying of the US dollar. And I'm just going to move to the profile that I have set up for cable on MT5, and as I said, I've got the daily chart here where we had that big fall yesterday, and obviously this is today's fall, and we've got the volume point of control here at 24.27. We've had, as you can see here, a nice break higher for cable, did very well last week, and now it's back into selling, as it were. I've got the Renko chart here, which I use for actual entries and staying in a trend and also exit. This is a little bit of congestion, as I said earlier on, moving up to just coming up to the London session. But we can see here, this is the move lower. And the nice thing about Renko, what it does, it smooths out the price action. You don't get, it will pick up any sort of congestion phases. We had the trend dots did turn to a bright blue, but I didn't get a bright blue on the trend monitor, which is what I would want to see, these two having to match up. So the pivots, and I've actually got fractals as well, just highlighting the congestion phases as we see here. Then we have the low of this congestion phase, and now the break lower. So if you understand how price moves in terms of trends and congestion phases, trends with volatility, without volatility, choppy trends, choppy consolidation phases, once you can recognize where where a market is at any given time on a given time frame, what you can then decide is to say, well, okay, obviously, it's been in trend, now it's moving sideways. We call this the primary trend. Is this primary trend going to be resumed, or are we actually going to get a reversal? And in fact, we've had a resumption of the primary trend. So that's how and looking at Renko, it really does help to paint a lovely picture of the structure of the chart, and you know, you don't need to look at it. You say, right, I can see the primary trend, I can see the pullbacks, I can see the congestion phases. It will you can put on moving averages onto here. You can I've got the support and resistance indicators on here. On the Ninja version of this, I can actually also put the Camarilla levels as well. So at the moment, you know, the move in cable is still looking bearish. Right, then I've got, let's move to my 3-minute chart first of all, which is what I would normally have sitting next to it here. And again, this is where we have we've got the break lower from the volume point of control, but it's really the 10-minute chart which is of interest to me because of where the levels are at the moment. Now, on this 10-minute chart on here, what I've done is I've actually put the lines of the currencies below, so I can see whether, you know, one is still rising, one is still falling. It also, when the lines are in this sort of intertwining, moving up and down like this, it tells me that I'm in a congestion phase. I know I'm in a congestion phase because I'm between R1 and S1. This is what's normally called, referred to either the neutral zone or the buffer zone. It's where there is no clear direction for this particular pair. We then get the break that we want, where we've got volatility coming in in the London session, which we would expect anyway, but it's a volatility candle. Then we've actually got a subsequent volatility candle to the upside. Price retreats there, but it's really the break of this level here. As you can see, the strong support level at the S1, and then down we go. Now, what's interesting about this piece of price action at the moment is that it went through the S2, a lot of volume coming in, but you've got wicks to the bottom of the candles. It's trying to reverse off the S3 at the moment at 25.19. If we round it up to 25.20, I suspect there's lots of buy orders sitting there. If you were looking for a potential price objective, a potential target for this, you would be looking down here at the S4, which is 24.86. When we move up to the hourly chart, we get a sort of clearer picture. We can see the breakdown from the S3, and you've got a closer potential target, which is at 25.04.24. The fourth levels on these indicators are actually they're key levels. They're very significant. It's where a break. You will find price tends to pause there. It will retest it. It will break through. Sometimes it will retest it. It will retest it again. We've actually developed 6 levels for this particular indicator, but this is a key level, the 25.04. Let's call it. Let's round it up to the nearest 0 and 5. Whenever you have levels on a chart, however you derive your support and resistance levels, whether it's with Fibonacci, whether it's a moving average, whether you have an indicator such as this one, whether you have a support and resistance indicator, rounded, if it's close to a 0 and a 5, that is going to be even more significant levels, because on the institutional side, that's where on the order boards, that's where you tend to find limit orders sitting either for sales or buys. It's just the way the market, all markets tend to work. They tend to work in these round numbers. Now, what we've seen on the 10-minute chart, we have obviously on the 3-minute chart, we've actually seen some buying coming in under these candles. We've seen attempt to rise here. That went up, not by very much. Then more selling, and this is what you would expect to see on the faster time frames, a lot of this choppy price action. And what's interesting on the 3-minute is that the VPOC has actually come down. That's at 25.20. When the volume point of control is volume and price over time, and when it moves down this way, it is going to add its own level, its own bearish, I'm not trying to say, it's going to be more bearish for the price action. So it's going to add it's got its own, support and resistance, but also with volume. That's what I'm trying to say. So if you were short here and the VPOC was up here and it's now moved down, that is actually quite encouraging for you, because it tells you there is more bearish pressure than bullish pressure. And then what you do to actually help you keep you in this trade is the Renko. The Renko at the moment, everything has slowed down slightly, which is what you would expect. We may get a pickup in momentum. We may get a volatility trigger. Volatility candle triggered, which is you can then decide as you, okay, I've had a really good move down, maybe it's time to come out. But at the moment, despite best efforts of buyers to come in, and this is based on either the limit orders in the market or traders, as David said, oh well, it's been going down for it's gone down 26 candles, it's time for a buy. Well, sometimes it is time for a buy, but sometimes it isn't. And bear in mind that on the actual Camarilla levels, we are looking at potentially 425, and you just have to. This is how you keep monitoring. Okay, I'll move over to you there. And again, this is on the Ninja Trader version of the move that we can see at the moment. It is, when you get a lovely move like this with nice volume and as I said, this waterfall, it gets to a point where buyers will inevitably step in for all sorts of reasons, limit orders, simply because traders think it can't go down any further. Well, markets can go a lot further down and a lot further and much higher than you and I can can ever imagine. So we just simply have to watch what the chart is telling us. And as I said, and by having the key levels marked up on your chart, either with a Camarilla or if you use Fibonacci, it's really entirely up to you. Bear in mind they are potential pause points, and just look at the volume again, look at the price action, look at the indicators, monitor everything, and and make, as I said, make the emotion that is obviously in the market work for you. Because at the end of the day, you are actually trading against other traders. They have a view of what is either what is supposed to be happening or is happening, and but you are actually trading what is actually happening. Is that right, David? Yeah. Yes, not what you think should happen. There's an awful lot of that at the moment. Okay, I'm just going to pass over to David. I'm just going to keep an eye on cable and see what happens when we reach the S4. As I said, we rounded up at 25. Whether in fact there are some nice buy orders maybe on the institutional side.